Hi, everybody. How's everyone doing after the Fed minutes yesterday? Everyone okay? Welcome. Welcome to FACE, viewers at investing.com. FACE, acronym for Forex Analytics Community Experience. So let me ask this question. How's the experience been in this community for people? Any comments? Helpful, added value to what you're trying to accomplish as a trader? Learn a few things, pick up a few decent trades, understand the whys behind it so you could repeat it. Okay, so I think this is the most important chart across the board. It's a 10-year yield chart. And, I think we've been pretty spot on with a lot of this. This decline, this bounce right here, recent bounce, was also forecasted. This was forecasted. And look at this. I mean, that's not a 200-day moving average. That's a 200-week moving average. Okay, so there's a few ways you could look at how low our 10-year yield's going to go. So I have a 3-drive formation that will manifest at 220, and I could come up with 220 by, let's just say, 3 1/4 to 275, keep it in round numbers at 50 basis points. And, we tried it a couple of times, so you could just tack on the 50 basis points, and that gives you 2 1/4. If you want to get real bearish, then, maybe you call this the right shoulder. And I know people that are talking lower than 220. The low twos, 201, measured move from here would be 70 basis points. So that would get you down there under 2. Okay, so I think we may even end up challenging here. But the reason is it's interesting, and I'm actually looking to fade this move eventually when we get into this zone. Not with futures, but it could be TBT time. I think the bonds are one of the highest ranked on DSI. So I'm thinking we get, let me find TLT. Here's TLT. So we'll get a 3rd drive to a top, and TLT, we're not there yet. Daily. All right, weekly. All right, it's going to come in over 128 right here. And that could set up, that's still a couple of good days from here. Okay. And I know guys that I respect that are looking for 137 in the bonds. Maybe. I think we'd have to be in the middle of a pretty good risk-off systemic type thing, Deutsche Bank, something like that, for us to get up here. And with sentiment already being in the upper 70s or 80s, I think that this blow off into this 3rd drive could end up being a decent short. There's TLT. We're probably going to have some divergences on TBT. And, these are ETFs, because we're talking to at investing.com today. Here's TBT. So here's the weekly, sitting at major resistance. So what kind of formation could we have in TBT if we have 3 drives to a top in TLT? Okay, maybe 3 drives here. So, we could break, maybe it's going to be under 30. I mean, this arithmetically, 32, 20, maybe in the low 30s, might set something up. Of course, I'm going to want some clean divergences in there, and sometimes the market has to do some work, but the bond market is very closely correlated with the yen, and the yen is under pressure. Interesting thing about the yen, and then I'm going to hand it off to very capable hands, Blake Morrow, of US dollar yen. As you could tell, as rates decline, The yen declines. So when yields just bumped recently, we had this rally in the yen, and I'm not sure if it's going to try it one more time. But if this gap remains unfilled, it's pretty serious. You'll have to call it a breakaway gap. So if I'm right about yields continuing lower, we probably have a shot to at least do this in the end, right? This line down here could end up being a magnet. So, see what happens down here in the next several days, weeks, whatever. But I think that's where we're going in the end if the call on yields is correct. And then down here, the yen might be a great buy if bonds are peaking. So just talking and kind of sharing a correlation that you could pay attention to when you're out there trading. You're a bond bull. You're looking for shorts in USD yen. If you think the bonds are peaking, like people have said for the last 20 years, I don't think we're going to make new lows in yields. The 10-year got down to 1.3 before this. So I don't think we're going to 1.3, but the low twos, I think is going to set up a pretty good bond short, pretty good US dollar yen buy. And hope that helps you guys today in today's session. And I'm going to let Blake cover a few of the majors. I'm going to let you, Blake, listen to me. So I'm just going to hand it over.
Appreciate
it. Yeah, it's like, who am I, Ed Sullivan? Let's have a really great shoot today, Blake.
How you doing this morning?
I peel me off the ceiling.
Peel you off the ceiling. All right. Well,
fine, buddy.
Yesterday we were talking about the euro dollar and how, we were just consolidating around the 78% retracement. We had some pretty weak PMI numbers out of Europe. So, I mean, if you look at like the, euro PMIs, like the German flash manufacturing PMIs, those are the numbers that I think jump out at me most. But we have the Eurozone flash and services PMIs coming in worse than expected. German IFO business confidence coming out a little worse than expected. And the euro takes another leg lower. But, I mean, despite the weakness in the data, we're arguably only about 20 pips lower than where we were yesterday. We are testing the 88% retracement, and I'm not going to call this a false breakdown yet, but if you're short the euro, you're probably going, what the hell, why hasn't it broken down? Why haven't we seen a big move lower? Well, something
how about this? If you're short euro,
I didn't mean to yawn on you.
All right. If you're short euro, why aren't you taking at least partial profits here?
Well,
because of exactly what you're talking about, Blake.
Sure, but let's point out what's happening this weekend. What is happening this weekend in Europe? Does anybody know out there? If you're listening and you trade the FX market, I know we have some investing.com listeners that are around. But what's happening this weekend in Europe? Anybody?
Yeah. Ping pong.
Elections, right? Yeah, exactly. We have elections. So what do you think when you're talking about, like, we're talking it's going to take a few weeks to figure out who's who and who takes what spot. When it's all said and done, we're going to in the next couple of weeks, we're going to have a pretty good idea of who who's in the ECB governing council, who's who in Parliament. And the fact of the matter is, I've got to think that going into this next couple of weeks, we might see more of a populist movement in government. And how's the euro going to respond to that? I think that European politicians are so ingrained into their the status quo that if there's a bigger shakeup in European elections over the course of the next, week, and you start to see some of those slots being filled by, more of a populist, nationalist type of government, that actually might end up being good for the euro. I don't think I can view it as a bad thing for the euro. You look at what's happened in the US and how much money has come into the US versus everywhere else. How about if that reverses a little bit and you start to see the opposite effect and, more money pouring back into the Eurozone? I'm not, I would be a little nervous being short the euro down here. Now it's not, it's not a trigger for me today to say, oh, I'm getting long the euro. Let's just make sure I've got that. We're all clear on that. Like today, I'm not going, oh, I'm buying the euro because of this, but I'm trying to give you more of a longer term macro backdrop over the course of the next month or two. And I'm sure my colleagues who happen to be in Athens, Greece, that will be joining me shortly, have some things to say about that. But and speaking of which, Steve, are you here just by chance? He's not here just yet. I'm sure he'll be here in a moment.
I am.
Oh, you are? Okay. Like you have elections happening. You guys have elections happening in Greece this weekend, right?
That is absolutely right.
Okay, so you got,
Actually, specifically in Greece, we have multiple elections happening this weekend, because we also have elections for municipalities, local elections.
Okay, so there's all these elections that are happening in Greece and all through the Eurozone. How do you think the euro could respond moving forward to a potential shift in government? And I think it's going to be a positive shift, frankly.
You mean Greek government? Because that's
not Greek. No one cares about the Greeks. I mean, I care about you guys.
Yeah, I know what you mean. Don't worry about it.
No, I'm talking just in general, and the Eurozone in general, where you get more of a nationalist, populist type of spin on politics. I actually think it's going to be a good thing. I think the euro could actually be a beneficiary of a little bit of change, and that's why, I was saying earlier, this isn't a trigger for me to just start outright buying the euro. I'm not doing that, but I'm a little skeptical about being bearish down at these levels, is I guess my point. So
I agree with you. I was also saying yesterday that it is obvious that the euro remains in a downtrend, but momentum is very much lacking, and under such a scenario, I think anything can become a catalyst for some kind of a squeeze. So personally, I'd rather stay away. But if we see euro break above 113, it's going to be looking quite appealing.
Yeah, exactly. I'm sorry. I'm accidentally drawing all over the.
Where's that D come in? 1.272, 106.96.
Yeah, about 110.50. Roughly.
Oh, 110.69. Okay, yeah. Thank you.
Somewhere around. It's actually like about 110.50, but roughly somewhere down there.
What is that tool? A, B, C, D.
Oh, that's me. That's just me manually drawing.
Oh,
that was me. I put it in there. There's no tool. I just drew it myself. I had to manually.
What's it called?
There's just a equal leg,
I got it.
CD move.
Okay.
It's a very simple,
I didn't know it.
It's a very simple pattern, both in harmonics and in Elliott waves. Actually,
see what people learn. Like, your host learns every day in here. So if I learn every day in here, I don't know how others aren't.
I'm not sitting here going, okay, I'm going to be buying the euro right now, but I am a little skeptical about being on the short side of the euro. And with the European elections, coming through the market over the course of the next, Sunday, Monday, I think you got to be a little hesitant about being, too aggressively short down here. I do believe what, Steve said, that momentum is starting to lack, and move above 113 and things get a little bit things turn a little bit more bullish for the euro, especially if we get above the 200-day moving average here. That comes in at 114. But regardless, it's not a trigger for me today to start buying the euro. Again, I have to be very clear on that. It's not that I'm looking at buying the euro today, but I will note that we did hit the 88% retracement. We are consolidating. We don't have a lot of downside momentum here. Let's talk about the pound really quick, and the pound is something.
So Blake, but just before you do that, so this is another situation, and you warned people about the trade deal before things fell apart, and the expression was prudence over valor. Same situation with European parliamentary elections.
Yeah, I think so, and you have to be a little bit, just a little bit more cautious down here. Now, the cable, I want to show you guys what I'm seeing here. We have this, minus the spike. This was I believe, if I'm not mistaken, this is a weekend spike. We spiked lower, and then, I tend to look at bodies more than wicks, especially on gaps. And frankly, this is a uptrend line comes into play around the 78% retracement. The cable loves to test the 78% retracement. So here we are testing the 78% retracement, possible Gartley pattern. As long as we remain above 126, being on the short side of the cable, you got to be a little careful with. I actually shorted some euro pound yesterday. So that is a trade that I'm currently in, and I actually avoided getting stopped out last night, which by just a few pips, which is good because usually I get stopped out like on the pip and then it reverses. I'm that good. So, and I'm obviously being a little sarcastic here because I put stops at breaking points, and so if I get stopped, it's usually that the market had my number. And,
great attitude. I'm that good.
Well, I mean, it is what it is. Yeah. I don't know why I'm so good, but I'm sure most of you guys feel the exact same way. You're like, oh my God, I got stopped out exactly right at the high or the low. Sometimes when I get stopped out, it's like, how could I don't know if I could have picked that level any better than I did for a reversal. They stopped me out and then reversed. But overnight, that didn't happen. Overnight, the euro pound came within, I don't know, it's about 5 pips of my stop. Yeah, it's 88.38. My stops are in the 40s. So we came really close to the stop. Now, I'm playing some cable on the long side. We'll pound on the long side as a result, because I actually think we're going to close back below the 200-day moving average, and I'm hoping that we do as well. You can see how we tagged this horizontal resistance here. We tagged horizontal resistance, 161% extension. This is, by the way, if you guys haven't seen this, this is the 14th today. We're working on the 14th green day on the euro pound. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Today is the 14th green candle so far. Doesn't mean it's going to end that way, but I would be a little skeptical about being on the long side here, especially that we're overbought. I put my stops above these highs, which didn't get tripped, fortunately, but it is something that I'm currently doing. But the cable, make no bones about it. The cable has been really under pressure as of late. And, we are at a 78% retracement. We might get a bounce here. There's a couple other, currencies that are really on my radar this morning. But if you use ForexAnalytix, just keep in mind that I do post at the end of the day, every day, North American session. I do the basic technical analysis, end of day updates, and I obviously do a lot of the intraday updates throughout the course of the session on basic technical analysis and candlestick analysis. So you guys will get my analysis there. But just want to let you know that I am, there are a few other things that I am on the radar, but I do want to point out the cable is at key support. Now, the pound, what I'd like to see today is I'd like to see a move. Let's go into an intraday chart. I'd like to see a move back above 127. Once you get above 127 right here, this is where things start to look a little bit better for the cable. If it's going to rally, it's going to look a little bit better at at those prices. Now, Coach, you were talking about the yen, so I might as well reference the yen here, because you're right, yields have been down quite a bit, and they've come under pressure. You're pointing out bonds and yields. This is the dollar yen, and this is a bear flag pattern that we have now. What you're going to notice here is we are at flag support. Whether you're looking at like this or like this, you can even probably do it like this. While we're above 110, you got to be a little careful being short the dollar yen. I'm actually quite surprised that the dollar yen hasn't broken down further. With the sell-off that we've seen in yields. And if you guys haven't seen the bond market, I'll show you just where is it?
I think the DSI was 78 on the bonds.
Yeah, here's the bond market, towards these trend highs, and that's what's kept yields under pressure. And like I said, I'm surprised that the dollar yen hasn't broken down by already. That's not to say it won't break down, but I mean, if you're short the dollar yen, you're probably going, why hasn't this happened just yet? I don't understand. So with that being said, the 110 level, as long as it holds, there might be another one of these,
another shot up into the gap.
Yeah, something like that.
That gap is, I think, very meaningful.
Yeah, this one right here.
Yeah, we didn't fill gaps in we filled gaps in S&Ps and so forth after that, and this is one of the only instruments that was unable to fill that Sunday night gap.
Yeah,
breakaway gap is what Edwards and McGee would define it as, unless it's filled.
Yeah, and then if you guys, the Edwards and McGee is probably one of the, it's the Bible of technical analysis. If you guys haven't got your, I have.
Oh yeah, I even brought it into the synagogue when I was going to Hebrew school.
Here it is, the technical. I'm looking at my book.
You got it?
Technical analysis of stock trends, and
what edition?
I think mine. I want to say. It says right here, 8th edition.
Wow, look at how many editions. Yeah,
I know. It's on like it's I don't know, 15th or maybe something like that. I bought that one. Actually, I lost my original one from 1999 that I had, and then I had to go back and rebuy it in like 05 or something. And
for basic technical, which is I could tell it influenced you, like, because of your work. But anyone who wants to learn just basic technical, continuation formations, reversal formations.
It is. It's probably the best sleeping material you can ever have. You pop that sucker open, read a couple pages, you'll be out for like 8 hours straight. It's great. It might take you a good 2 years to get through it that way, but it's good sleeping material. But it is really the Bible of technical analysis, and I've leaned on it a lot over the years, because it's all relevant. Despite the charts being from like 1980, it doesn't matter. It's all the same stuff. We all look at the same stuff. But anyway, okay. But anyway, I think you got to be careful with the dollar yen here. I mean, we could probe. Obviously, stocks are under a little bit of pressure, and I'll go over to the S&P, and then I'm going to pass it over to Steve. We were in this triangle pattern, and then we finally broke down. So obviously, naturally, you see, some downward pressure in like the yen pairs. You got the euro yen, which had a key rejection of this. We've been noting this major resistance zone. We came knocked up on it on Tuesday, and we've reversed since then. And all this, downside pressure that you're seeing in the yen pairs is a result of, equities breaking lower. And finally, we come out of a triangle pattern, and we are moving lower. Now, the question is, how low are we going to go here out of the S&Ps? all of this support is so critical right through here at this 2800 to 2820, that, now that we're, getting down towards there, do you really want to be on the short side? If you made the move yesterday evening on the futures on that breakdown, if I was short, which I'm not, but I'm just saying if I was short, my stops would be at break even right now. I wouldn't want to risk any more than that, knowing how key this support is for the S&P. So again, that doesn't mean that we can't break down. I'm just saying that well, like you would say, Coach, prudence over valor. So this is where you kind of go, okay, I'm moving my stops to break even, and if I get stopped out, so be it. I'm not.
You want to say something that's breaking down, and yet we have to congratulate Steve Olge on his hold on the short in crude oil.
Oh yeah, crude. Well, here, you know what? I'll give a different eye than what Steve. Yeah, this is a pretty big. This has been a big, support / resistance zone for the last, you're looking at it for the last year, and this false breakout, this one right here, this is a big deal. I mean, in my opinion, and this false breakout means that, it was like inevitable for downside. So, we broke down out of the up channel, come back and retest. I mean, this is perfect, basic technical analysis. We tested previous support, current resistance, previous support zone. It's, just acted perfectly. And here we are, just taking the longs to the cleaner. So yeah, great job, Steve. Speaking of Steve, I'm going to pass it over to my colleague, Steve and Stelios, the two Greeks, the double Greek threat. Good morning, guys.
Good morning, mate.
How are you guys doing?
Good.
Very well.
Good. So with the elections, Stelios, I'm sure you got something to say. We've got I heard Theresa May locked herself in her office and boarded it up with a couch or something that not letting people in. So what's happening in the Brexit arena right now?
Well, Theresa May, as we all know, announced that she's planning to bring a fourth withdrawal agreement. And that sparked a lot of reaction, especially from her own camp. And there were many conservatives urging her to resign. One of her top ministers, Andrea Leadsom, I don't know how you pronounce it, resigned yesterday over this whole deal. And, this was another very big resignation of one of the key people next to her. And there were big rumors that Theresa May herself was going to go yesterday. She hasn't gone yet.
Yeah, I mean, she just won't die. I mean, politically,
yeah.
Crazy. Okay, so what do you think about that? What do you think about, when do you think she's going to resign? I mean, it's obviously it's going to happen. So when do you think it's going to happen? Why has she hung on this long?
I mean, I read a few people, and I talked to a few people, and they seem to think that she's waiting for the result of the elections, which is going to be a landslide win for the Brexit party in terms of the UK. I mean, there's no doubt about that. So I don't know what she's waiting for, or what kind of hope she has, but I don't see any. So when is she going to go? I have no clue, but I think by the end of the weekend, when we get the results of the elections, I think there's going to be nothing left to keep her there, my humble opinion. So, but she's been around for so long, and there's been months and months of rumors that she's going to go because of the way things have been going. And frankly, the whole handling of Brexit has been shocking, but she's still there. So, what can I say?
All right. Well, yeah. That's true. What can you say? That she's still there, amazingly. Well, guys, I'm going to pass it over to you. I want to thank everybody for being here this morning, and remember, we've got still another hour of analysis and interviews, and I'm going to pass it over to the three of you guys.
Blake.
Thank you, Blake.
Yes. Good hunting, Blake.
Yes.
Before you go, it's time to remind people that starting tomorrow we have a promo, right?
Yeah, so it's starting tomorrow. You guys, this is going to be the if you guys are
Memorial
looking
Day
for,
offer.
yeah, Memorial Day special for those of you that want to be involved with ForexAnalytix. We're going to be offering a discount, which we don't, if you guys have been listening long enough, we don't offer discounts all the time. It's not like a, oh, this week's a new discount. No, it's, a few times a year, special times a year, we offer a discount, which, I'm sorry?
You can see it on my screen. I just put it on.
Oh, yeah. So it's so you can see we do have a discount. And how long is this going to be good till?
Until the 28th of the month. Starts tomorrow morning European hours, and including the 28th.
So there you go, guys. So take advantage of, if you guys were on the fence and thinking, oh, I wasn't really too sure if I really wanted to be part of ForexAnalytix. Well, this is the best time to try, because you can buy 1 month, get 1 month free, or get discounts on the semi-annual, annual subscriptions. And for those of you that are already members and you're like, ooh, I want to get, take advantage of the discount, you can do that too. If you're paying month to month and you're like, ooh, I want to get an annual discount, you can, upgrade and pay less. And one of the things that Steve will show you is our chat room is exclusive, and we have 100 people on average in there all day long talking the markets, myself included, and I'm in there all day. So that's where I spend all my time. It's not on Twitter. I look at Twitter probably less than 5% of my day, maybe less than 3%. So we're always in the chat room. That's where I'm at, posting my
106 people now.
Okay.
By the way.
Oh yeah, there we are. And thanks for and you guys are on Jumbotron. So you guys have a great day. And I'll say hello. There I am. So anyway,
Blake, it would also be a great way for people that haven't joined to wish me happy birthday, which is Monday during the promo.
Oh, well,
there you go.
Say happy birthday and do yourself a favor at the same time.
Let's all celebrate.
I'm going to be 39.
We're all 39 again. That's great. All right.
You know what the fun part is? That I'm actually going to be in a few days 39, and that's not a joke.
I don't rub it in, punk.
We wish. All right. Happy birthday, gentlemen. All right.
Talk
to you later. Bye-bye.
See you.
Bye-bye.
Well, your birthday's soon too, Steve, or what?
Yeah, 12th of June, Coach.
Oh, and so you're a Gemini?
Yep.
No wonder we interrupt people all the time. It's our evil. That's okay. Now I know you. All right. Poor guy. I suggest lithium for the schizophrenia. Okay. Anyway, go ahead. Take it away, buddy.
No, not schizophrenia, actually. If you think about it, Gemini, it should probably register more as a bipolar disorder, right?
Yeah, that's right. Yeah. I'm so happy. Oh, shit. All right.
Okay. So Stelios, besides the Brexit drama, I honestly think that we've been so much conditioned with the Chinese-US deal and Brexit drama that at some point when both those two will have been resolved, we'll probably get depressed. What do you think?
Yeah,
I will need my daily. I will need my daily dosage of drama somehow.
Maybe we'll have to talk about Grexit at that point. You never know.
Perhaps, and that's going to be double interesting for us, right?
So we talked about the UK. I don't have much more to say really about that. We talking about the US-China. We had more escalation yesterday. More companies are added to the blacklist of the UK, where they're basically companies that are not to be to do dealings with in terms of the US companies. And so the Chinese side are probably getting a little bit frustrated, and the Ministry of Commerce today of China made a statement, and they said that the US need to correct their wrong actions if they want to continue the talks. There should be mutual respect, and the US have escalated trade frictions greatly. So it's not like the Chinese are going to take it and just sit there. So they're going to retaliate as they said they would, probably. But you know, it's this thing is still ongoing and getting on my nerves actually now. But so that's that. We had European data today. Blake briefly mentioned it. We had PMIs. German PMIs were really not good again. Like manufacturing PMI is not just in contraction territory. It's at 44.3. And
yeah,
I personally
far away from expansion. Yeah.
Personally, I don't remember, prints like that. I'm sure if we go far
outside of recessions. Yeah, you're absolutely right, Stelio.
Yes. So that tells us something. Surprisingly, the French numbers were better than expected. So maybe the yellow vests are doing something right. I don't know. I'm kidding. But
and in general, the manufacturing PMI for the whole Eurozone is quite deep in contractionary territory, 47.7. Yeah, if I remember right. Yeah.
Yeah, and but for Germany in particular, the manufacturing side is quite large. It's a big part of their economy. So that was definitely interesting.
The fun part to monitor actually is the divergence between sentiment and reality. For example, business expectations, as you saw, is at 95.3 for Germany, at the same time that the PMIs are deep in contractionary territory, right?
Yeah,
so,
yeah.
So there is still a lot of wishful thinking. I see the same in the US. I mean, soft indicators doing quite well, while hard indicators are actually not doing so well.
Historically, when this happens, when sentiment is high, you know that the recessions usually start when sentiment is high, and the recovery
almost always the recessions actually.
Yes.
Actually, I love hearing people trying to provide argument against a possible recession coming by giving evidence that how can you have a recession with so low unemployment? How can you have a recession with consumer sentiment being that high? Every single time we go in a recession, it happens at the bottom of the unemployment for that cycle and at the top of sentiment. I mean, every single time. Yeah. And people still offer that as an argument against the possibility of going into a recession, which makes no sense.
Yeah. Actually, our friend Karem is actually saying that in France, the tear gas industry is pulling up the PMIs. Yeah, that's a good one. Yeah. So, and the other thing I wanted to briefly mention is that Blake mentioned that we have the European elections and maybe change could be good. I think overall, in theory, change is good. But when you see political parties like Le Pen in France, who is leading the polls, and you have this far right parties increasing their percentages and all that, I feel quite scared of that. So I don't think this kind of change would be good for the Eurozone.
Yes, but it is, unfortunately, it's not by accident. It's not random, and it's not going to go away unless the political parties realize that the main reason that we have far-right parties getting stronger and stronger by the election is the fact that they don't seem to listen to people's worries about the Islamic threat, and this is not a political position. I'm saying now. I mean, it's one thing having immigration, which you should at any given point, and it's another thing, controlling what kind of an immigration you have, because there are a lot of issues in several countries with immigration, and unless they do it the proper way, that's going to keep hurting them. And unfortunately, people are not smart enough, so they shift to the other side of the spectrum, which neither side is the proper one. So they will have.
You see parties like the neo-Nazis in Greece getting 10%. You're right; it's a frustration vote.
Which is abysmal. Yeah, which is abysmal, of course.
Yeah. Anyway, so let's see what happens with the European elections. I'm not 100% sure that a change would be good in this respect, but let's see what it brings.
Yeah, absolutely. Anyhow, back to the charts, and we do have some interesting developments today. We see that actually Coach mentioned it before. So let's start from that. We do see crude breaking down. If you remember, I was more or less expecting this. I think this was a very, very clear ABC type of correction here, perfectly channeled. And yesterday's acceleration of momentum after getting rejected from this horizontal support resistance area more or less indicated to me that the chances of continuing lower are significantly higher. And today we actually, yesterday we closed right on this channel support. Today we're actually breaching through it with momentum. As I was saying yesterday, I think that we're probably going to hit 58 at the very least, if not lower. Depends, because you never know. I mean, sometimes you expect a corrective move lower, and then you get surprised, and you get like a third wave down. For example, here you see you get a lot more downside momentum than you expected, and then you realize that the move lower is actually not corrective, but it's it's a big reversal that you have in hand. Anyhow, I still hold part of my position, and I'm actually looking.
Classic rebound to 61.8 too, Steve.
Yeah. It was perfect.
I mean, it's all textbook.
It was perfect in every single aspect. Not always technicals play out so well, but even if you see it on the 4-hour chart, here it is. I mean, multiple. Oh, sorry, this is the weekly. Even from the weekly, by the way, keep in mind that we got.
It's going to the weekly blue line. You just have the moving average.
And let's have a look at it on the 4-hour chart. Here it is. So, as you said, almost made it to the 61.8.
It was a 3 drive up there too. The last high was a 1, 2, 3.
Oh, you mean this little one here? Yeah.
Sometimes the third drive can be a fractal of a 3 drive, and you get 3 on the third. See how the other?
Yeah, you're absolutely right. In the short term here, we did have a 3 drive here.
Yeah, shows on the hourly.
By the way, if you paid close attention, we even had a little head and shoulders formation here.
Yeah.
There you go. You see it? So
and it was hard to do because people were worried about all the bellicose talk about Iran.
Yeah, something, if it's one thing, and indirectly I mentioned it yesterday again, and other times I've mentioned it directly, absolutely directly. If I've learned one thing, is when a chart tells me something, and I'm looking to trade in the medium term and not like go in a trade for a year or two, which I never do, but I'm saying that that would be a totally different story. I completely ignore the fundamentals, because the fundamentals very frequently don't indicate what's going to happen in the very short term. So yeah, you might have fears, you might have.
I missed it, and you know how bearish I was. I don't know. That's why sometimes, like for me, Steve, and maybe our audience, I get distracted. I was laser focused on crude, and I started piddling around in some other things. And also, I thought the S&Ps, which up until yesterday would carry them, and I missed it.
That's okay. I mean,
I'm sad. That's the other Gemini part. I'm sad now. All right. Yeah, there'll be another opportunity, don't you think?
By the way, there are always opportunities in the market. By the way, a friend is asking, so do I think that crude is going to move lower? Yeah, absolutely. I think that it has. First of all, just look at this. I mean, just a simple projection now for an ABC, meaning A equals C, projects down to 57.30. If you look on the left side on the chart, that general area 57.50 it has acted as resistance and support in the past. If you look on the daily chart, the 58 area looks solid as well, because it's these lows here. So I think that anywhere between 57.30 and 58 is the next target, and it has a very, very high chance of being hit.
You've been milking crude like a cow, Steve. Long from the January lows and rode it almost all the way up, and then maybe missed a few bucks to the upside, but didn't get short early, or maybe you did once, but you stuck with it and built.
To be honest, since
and now
last
you're
year,
going to be there for this correction. You know,
Yeah, to
there
be
are
honest,
some
since
guys
last
looking
year-
for 38, Steve. And I wouldn't be surprised if Grega's weekly points towards that possibility.
Who knows? Who knows?
Well, if you're a subscriber, you know. Anyone want to know what Grega is doing on the weekly?
Sure.
Well,
let's
then
have a look
sign up on my birthday.
Let's give them a freebie. Let's see what Greg
They
is
can't
thinking.
control me today, these guys. They can't control me.
Speaking of which, let's see what Greg is thinking. Since I have a short position as well, it's not a bad idea. Many times I avoid looking because I don't want to get my bias affected. You know what I mean?
Yeah, I know.
Actually, Grega is quite more bearish than I am.
Yeah.
From what you see here.
That's a daily.
Yeah.
We're almost at that target right there.
Perhaps we're going to get a third one.
Let's see. Look at this. Look at this. Oh, the weekly has a real low target.
Oh, yeah. There's no surprise about that. I'm also very, very bearish. I'm also very, very bearish in the medium to long term. Why? Simply because we had an impulsive move lower here. And in comparison to this move lower, this rebound was corrective. The question, though, that I have in mind is, are we going lower from here? Or are we first going to do something like...
pull back and then make another run?
Like this, you know what I mean?
Yeah.
Which is also...
possible.
Which is also a likelihood.
Yeah.
So this is the only question in my mind, you know what I mean? Because I am bearish crude. If I had to hold a position for the next, 3 months, 5 months, 6 months, it would be short, irrespective.
Crude and copper, tell me, and I was hearing your talk about, that we're not in a recession because of, the unemployment situation, but there's something wrong with crude and copper in bear markets. It's not a positive economic message. Oh,
no, definitely not. Copper is on its way to this 257 area. Yeah. Keep in mind that 257 area, last time we were there was summer 2017.
Wait till it takes that out. It measures 220. There'll be bounces, but if you just take a measured move under there, you get to $2
a break below 257 is going to be definitely, from a technical perspective, very bearish. It will definitely extend and point to further losses. Speaking of the metals, gold is having a nice rebound today so far. If you remember, I was quite clear that 1265 is now a key level. As long as we stay above it, I understand totally people that might want to be long because, the risk-reward ratio definitely favors you. On the other hand, after seeing this little false break higher, I'm really skeptical to be in either side of gold. I was short and made some good money there, then I was long and lost little money because, I had a very tight stop loss. My confidence was not high in this breakout. So, I was very careful. Now I actually have no bias until I see what happens with this formation. One thing is for sure, silver is rebounding from the 78.6. Somebody can even see this as a little overthrow from this descending wedge, but unless I see this wedge breaking to the upside, silver still remains bearish. Now, if I do see silver taking out this wedge, then I can start considering this little breakdown to and below, if we're talking intraday, the 78.6% fib, being an overthrow from this wedge, and probably that's going to be a reverse signal, meaning it might actually be a bullish signal because I bet a lot of people got short at very bad prices, and usually that's a ominous sign for what's going to happen to those people later on. For me to gain more confidence anyhow in the upside, I would want to see the 1480 area break to the upside, and then I can start considering bullish scenarios for silver, and obviously gold is going to be following suit I don't know if it's going to be overperforming or underperforming. Usually, when metals rebound, silver is doing better than gold. When they tank, it's the exact opposite. But remains to be seen in this case. Gold-silver ratio still pulling back from its highs, but still, very, very close to the high. So it remains bullish until proven otherwise. We also have a question about palladium. We had questions before that, but since we're in the metals, palladium has really stalled here. But I still favor the downside, because we're still in a move lower from the highs. So until proven otherwise, I favor the downsides. Same deal with platinum. Platinum actually seems to be having an impulsive move lower. So especially for platinum, I think even a rebound higher is definitely going to be a selling opportunity. So platinum even more bearish. Actually, the most bearish of all metals at the moment. It has had the most bearish momentum by far lately. So let me go back to previous questions, which we have quite a lot today. If nationalists win in France, that could be big for euro. I believe negative. I agree with you, with Olivier. What's your macro view on that call, Blake? I'm not sure what call you're talking about now, though, and Blake is here. Monday is Memorial Day here in the US, so market will be slow. Will you be broadcasting? Yeah, I think we will. Members have little real power. They're more or less disruptions than anything else, says Scott. Yeah, more or less that's the case, but not exactly. What is the DSI on the euro pound? Nick is asking Blake. He obviously didn't see your question, but I have absolutely no problem having a look at it for you. Let me find. So the DSI. Let's see. Oh, what did you ask for? The DSI, the euro pound. We don't get DSI for the euro pound, mate. You can actually build, if you want, let's say a synthetic reading, because the DSI is like for euro, for pound. So I can tell you that the DSI for euro currently is 25, and the DSI for pound is at 10. So as you understand, if we had a DSI for euro pound, it would be rather bullish, okay? Because the sentiment for euro is a lot less bearish than the sentiment for pound at the moment. The DSI 10 for pound at the moment, by the way, is the lowest reading that we have on the board at the moment. So between all those instruments that we have a DSI for, which they are like 2, 4, 6, 8, 10, I would say around 30, 40. 10 currently is the lowest trading that we have. So obviously sentiment for the pound is very bearish. We've seen more bearish readings than 10. We've even rarely seen a reading of 4. That happens, of course, very, very rarely. What I'm trying to say here is that 10 is a very bearish reading, but it can actually get more bearish before we see a rebound. Gold on fire, says Nidis. Yes, it's quite strong today. I wouldn't say it's on fire, but it's quite strong. Rio says, for the last 2 years, we had this one-sided market. USD and Swissy were the strongest during the whole last 2 years. When will we see a reversal? In my opinion, not far away. In time, I'm in. Aussie yen heads lower. I think Aussie yen heads lower to 71.40, says Gerald. Let's have a look at it. By the way, speaking of which, let's have a look at the Aussie, the Kiwi, and then we can have a look at the Aussie and the Kiwi. The Aussie and the Kiwi against the yen, sorry. Aussie, as you see, barely holding the 78.6. Next downside target comes at this spike low at 67.45. Obviously, currently there is nothing bullish with this chart, not yet at least. Kiwi, still depreciating strongly after breaking this triangle towards the 64.25 low. I'm just paying a little bit attention here to this potential descending wedge. I can see I can see an argument for a bullish reversal. Of course, I don't care about it. I mean, I still consider it bearish until proven otherwise. I'm just monitoring this descending wedge. If we break above it and I see some kind of an acceleration, then I might be convinced that, you know, some kind of a big rebound has started here. Now, having to do with the Aussie yen and the Kiwi yen, let's have a look at both of them. Aussie yen, same deal with the Aussie USD, has broken below a formation, is consolidating at a fib level. This is, in this case, the 50% fib. Yes, it does look bearish. We broke below this horizontal support area. We retested it as a resistance. It held. So yeah, I agree with you. The next downside target is 61.8 at 74.45. And since we went over those, let's have a look at the Kiwi yen as well. As you see, Kiwi yen looks even worse. I can even see potentially third wave, and probably we're still in a fourth wave or just breaking below a fourth wave, going for a fifth. So I do think more downside here to come as well. 71, the 78.6 is the next downside target. Was short crude and added 63 areas as Costas. That's a good trade, Costa. Via puts, that's a good trade. Crude geometric target 54.40. Yeah, okay, that's still far away, but absolutely possible. We need a lesson on staying focused. Yeah, that's very true for all of us, actually. My pleasure, Peter. I think Dale is hinting that he wants someone to spank him for his birthday. Lol, Ziggy. Monthly geometric target 40 to 75. Actually, Ben, if this is a continuation to the big rebound higher, we can actually move even lower than that. Hi, Steve. Kiwi CAD also.
They would hurt their hands, Steve. That's all I'll say.
Okay, coach. If you say so.
No doubt about it.
we have a question about the Kiwi CAD. So yeah, why not? Let's have a look at the Aussie CAD, the Kiwi CAD. Actually, last time we saw the Aussie CAD, this is what I expected. This is more or less what happened. I just expected, you know, a stronger rebound. So yeah, Aussie CAD remains under pressure. Next downside target at 91 cents. Let's have a look at the Kiwi CAD, and then we also have a question about, let's see, was something weird. Yeah, the pound Swiss. So Kiwi CAD also under pressure. Next downside support, the 61.8. We also have a horizontal support area at 86. I don't really see anything bullish yet. Yeah, I know that if you zoom in, we might be attempting to form some kind of a daily, of a morning star formation here, but it's too early to judge, that for being the case. So I think you need to maintain a bearish bias. And now having to do with pound Swissy, I don't even know when was the last time we had a look at it. Last time we had a look at it, I expected a move lower, a rebound. We had both of those happening, as it seems, but then we just got rejected from the same area. That was more or less a double top, and now we're just dumping lower in an impulsive manner, unquestionably in an impulsive manner. So, that's not looking good. Now, where would you find support here? That's a good damn question. First of all, we need to fib this area and see what we get. 61.8, roughly at 127. Below that, I would say 126, this consolidation here. But definitely sell on rallies with 128.50 should be from this point on quite strong resistance. So that's what I think about the pound Swissy. Let me see if I missed any questions. Do we have an interview, by the way, today, Coach?
Yes, I don't see Vince in here. Vince, if you're in here, will you let me know in the... Huh?
Yeah, he should type in the question box.
Yeah.
If he's in here.
Vince in here earlier, but I don't see him. and I know he was looking forward to it. So I don't know, Steve. Vince, if you're here, please type in the question box. I don't know if he retweeted. He retweeted yesterday his interview.
I don't see anybody with the name Vince either.
Yeah.
Oh, question about the dollar cut. Let's have a look at it. By the way, I'm going to speak with Gregor so he can join in tomorrow in my place. Coach, I'll be on an island actually. Starting tonight. So
I need someone to work with me. Make sure I have Zoom right for Monday.
Oh, it's not going to be this month. It's going to be next month, so you don't have to worry about it.
Oh, okay, good. I don't like to worry.
Yeah. So we're going to do it next week. Don't worry about it at all, okay?
But I'll tell you something, and I want to know. Oh, there's Vince. Okay. Anyway, but don't tell me worrying doesn't work, Steve, because almost everything I worry about doesn't happen.
That's a good point. Okay. So,
all right, Vince is here.
Having to do the USD cut, since we had that question, we're still consolidating between 133.80 and 135.20. So as long as we're within that range, there's nothing really to do. Yesterday's reaction, though, from this previous triangle's resistance, which acted once again as support, especially given the good data that we had from Canada, is something to ponder about. Okay. Especially if we have more weakness, if we have an acceleration in weakness in crude, I think that there is a decent chance that crude is finally going to break the resistance of this area and extend higher. Now, extending higher, where would I be looking for resistance? And the answer is here, at this little confluence there. It's the confluence of this red ascending channel as resistance and previous high there, also horizontal support resistance in multiple occasions, currently passing from 136.50. Okay, so that's where I would be targeting, Hamid. Okay, thank you all very much, and I'll see you. There is a chance I'll be on tomorrow. Depends on how good the internet connection is there. But if I'm not, I'll see you all on Monday.
Have a great break, Steve.
Thank you, Coach.
All right, buddy. Hi, Vince. Making you the presenter now, buddy. Looking forward to talking to you and see what has your attention right now. Welcome back, Vince.
Good morning, Dale. Can you hear me?
Yeah, can hear you, can see you. Everything. Okay. Got you, buddy.
What do you, if you don't mind, what do you see on my screen? Do you see?
I see gold. I see gold coming out of here. Got up to 1284. Is
okay, so
on your radar? Yeah.
You see charts and you see you see a picture in the lower corner?
Yeah, I see you.
Okay, I'm trying to get the I'm trying to open up the little window for listeners and questions and stuff like that. There you go. Okay, I got it.
Okay.
Right. Okay.
All right. So Vince, great to have you back, my trading warrior brother. How are you?
Good. Thank you for having me back. I've been looking forward to this.
Yeah, we had a great talk last time, and I know you're a metalhead, and
yeah.
Okay, I'm not talking about what's the name of that band that is known for heavy metal. Help me here, Vince.
Metallica.
Oh, okay, Metallica. Yeah. Anyway, so looking at the gold here, and I was probing the long side here. My view is that it's most likely some kind of bear market rally, maybe halfway back, and then we get another wave to the downside. What are you thinking in here, bro?
I think. Well, first of all, starting at the macro, we've been in a range for 5 years or more.
Yeah.
But if you're an active trader, I think today's rally, to your point, is very likely a bear market rally, and the explanation kind of goes like this. Down in this area, using different tools, you could see what we used to see on the floor, and that is there was a lot of selling but the market wasn't going lower. Bids were getting hit, but the market wasn't going lower. So there was stable buying that was keeping the market there. So eventually what happens, for your listeners, when you have a lot of selling hitting bids and the market refuses to budge, basically what happens is the shorts are a little lesser capitalized, maybe more algorithmic in their behavior, and they start to cover. So to your point, I don't really have a directional opinion, but I definitely, I deal in probabilities. So this rally is either the begin. I mean, this is it's not advice, but it becomes actionable. This rally is either the beginning of a much bigger rally, or obviously it is a bear market rally. So you have to look for flags, as I'm sure you do. And for me, the flags are, if this market were to just using your eyes, if this market were to close right here, this long tail above, and I'm not a technician, tells me that there's a lot of selling here. And I actually have, using Michael Moore's technical numbers, that between 84 and 86 there should be selling. And above
it's about halfway back.
Yeah, exactly. So if this is a bear market rally, we have a problem because the next levels below the 1268 area come in the 1240, and the trading range underneath. And
maybe that ties together with the dollar not peaking out yet, Vince. You have a read on Dixie or any of the instruments in there?
I do. And anybody who follows currencies, and if you're a currency trader, you will look at gold as a hobby sometimes if you focus entirely on currencies. And anyone who's been looking at gold, in fact, I got a text from a guy this morning in Hong Kong who said I bought gold. And I laughed at him. I go, you shouldn't be trading that. You should be trading the Hong Kong dollar or the yuan. And he's like, it's for fun. But anyway, the point is, to your point, the gold dollar or the gold Dixie relationship hasn't been as robust as usual.
Right.
I'm going to offer a reason for that. Gold is beginning, although the correlation with the dollar is the most important thing driving gold. The gold itself is now changed in market structure terms, and you will see it not necessarily move tick for tick with gold with the dollar higher or lower, inverted. So, for example, in the macro, you will still see a much stronger relationship between gold and the dollar, but in the micro, the wiggles and waggles will make less sense. For example,
how about U.S. dollar yen and gold inverse relationship?
The dollar yen gold inverse relationship has been a go-to. Let me get rid of this Bollinger Band thing here for you. Has been we'll look at it over weeks. Has been a go-to. If you over the last 5 years or more, gold and the dollar yen inverted have been almost like tracking stocks. So that's a good observation. When the trade war started, say, I don't know, or the hints of it started, say, I don't know, June of last year, that seemed to decouple, and it seemed to decouple. I think, right, and this is not confirmed, because of it started to act more in line with how the yuan dollar behaved, and I think that's because of China being a large purchaser of gold. But it has started to reassert itself to the yen, and people should remember, to your point about the dollar yen and its corollary, the DXY. The DXY is not all the currencies versus the dollar. Right. I think it's
mainly euro.
Euro, right? It's mainly euro, right?
It's even more than that, 60, I think.
Well, okay, so there you go.
Yeah.
So here we are. I mean, take a look at this. I mean, if although I haven't put it up here, why don't we just do this? I mean, although we are slaves to watching the dollar versus gold, because they are, you're buying gold that's denominated in dollars. As we buy Cadillacs or Lee jeans, it's the same concept. But you'll see that, number one, gold has, on the left-hand side, you can see the dollar has had, on a weekly basis since July of 18, an almost relentless orderly rally, despite what looks like volatility. But
right.
gold, meanwhile,
yeah,
right, gold did what gold is supposed to drop when the dollar rallies. Okay, this makes sense.
Right.
But
gold rallied without dollar weakness.
Right.
In that last wave.
That's a good way to say it. Yes, gold is more and more becoming
a currency, individual currency, maybe.
Right. Well, right.
What do you think?
And there's some real market structure changes that add to that, and I can touch on that if you want. I wanted to talk about market psychology because some projects I'm working on, but anybody who's looking at gold, we may have touched on this before, but it happened. On March 29th, Basel III was enacted, which made gold go from a Tier 3 asset to a Tier 1 asset, which means a Tier 3 asset is like if you go to the bank and you say, here's my Picasso painting, they'll give you 50% cash for it. Gold was at one time, since Bretton Woods, as they demonetized it, it was a tier 3 asset. So you can only get 50% collateral. So if I'm a bank, right, any bank, and I have a margin issue with my own portfolio, I would sell gold to get the other 50%. Can you bear with me 1 second? The point is, on March 29th, gold became 100% collaterable. So if gold's trading $1,500, I can go to the Fed window and get $1,500 for it. I used to only be able to get $750. So although people were like, oh, that's why gold's going to go up, and I think people bought in this area thinking that this was going to be a big deal. It doesn't necessarily mean gold is going up. It just means that every time the stock market crashes, if you remember, how many times in the past have people said gold's a safe haven, and then the stock market will crash and gold will be down, right?
Exactly.
Okay, but now you're seeing a higher correlation between gold and the stock market because
risk off. Yeah, risk off is working.
You get gold, right? Give me 1 second, please. I want to take care of one thing here. Pardon me for 1 second.
Sure.
Thank you.
So anyway, Vince is making some good point. I didn't know that. Did you guys know that it's Tier 1 now? God, the Fed's going to have to print a lot of money at people. But you know what? People aren't going to go the window with their gold. They're going to keep it in the coffee can, in my extremely accurate and humble opinion.
The coffee can, I heard that.
Yeah, people aren't going to go the Fed window to sell it. They're going to keep it in the coffee can.
Right. They'll just use it as if I'm Bank of America and I have gold bullion or on my balance sheet, I can go to it's as part of my assets determining how much money I can get from the Fed window. It used to be 50%. Now, there's other things that have changed too, but this has made gold less likely to be sold when the stock market dumps. And you can see this more obviously in Europe because that's where Basel III was implemented. So people are thinking gold's going to go to the moon. It's not. If you believe that markets are managed, as do I, the gold market is going to remain in a range until every central bank has the gold they want. The tell is that usually, historically, when people buy precious metals, they buy precious metals. They buy gold and silver. So if a bank recommends to buy precious metals, you'll buy $1 worth of gold and $1 worth of silver. Gold will be up $10, silver will be up 15 cents or 20 cents. And in rallies, the gold-silver ratio would come in. But what we're looking at now is
new highs in the gold-silver ratio recently, right? You have that chart, Vince?
Yeah, it's on here somewhere. Let me find it.
Be a nice one for people to look at.
Yeah, I think it. And before I put it up, well, actually, let me put it up. Let me find it. I'm not sure what the symbol is. I thought I had it. Oh, I'm looking at. What am I looking at here? Oh, it's at the bottom. Here we go. Gold, silver. Okay, check this out.
Yeah.
All right, now this is a weekly chart of the gold-silver ratio. Now, anybody who's a silver bug or looks at silver would remember back in 2016. I'll squeeze this a little bit.
Yeah.
When we had Brexit, silver actually had some crazy move, and gold and silver rallied, and then gold collapsed, so the ratio collapsed. So the chart you're looking at here is how much silver does it take to buy a bar of gold, right? The contract was. But then you've had this, unrelenting rally, and people who look at the correlation between gold and silver, which I don't really look at, but I'm showing it now, and we're looking at it now because, in my opinion, this whole move from here to here is a direct relationship of gold becoming, as you said, money. Gold is legally money again. It's just not currency, meaning central banks are buying it, not just Russia and China. Europe is buying it to shore up their balance sheet in case their own currencies have trouble. But they're not going to permit it to be currency, but they will use it as de facto money. Silver
Maybe an important tell, Vince, and I'm interested in your reaction to it, is that, I've been around. I remember the hunts. I remember Russia going into Afghanistan in January 1980, and silver at $50, and gold went to, I think, Maury Kravitz was the gold king in Chicago. Remember the IMM pit? And I do remember that all through precious metal bull markets really occur with silver outperforming. And maybe that's going to be the tell, is when we peak up here in the gold silver ratio, because really gold's gone nowhere, even though it's held up better than silver, that the tell for the beginning of a new bull market in precious metals will be this thing rolling over. What do you think?
I think, well, let me start with something that's been said to me, that was said to me years ago. In all precious metals rallies, silver leads.
Okay.
In all precious metal, not rallies.
Who taught you that?
In true, I'll tell you in a second. Let me get the phrase right so I don't get.
All right.
In true precious metal bull markets, silver leads. So he would say to me, the guy used to run the GSCI index. Before that, he was head trader in precious metals at Drexel, right? So Drexel had a lot of precious metals back in the day.
Right.
And then Bear Stearns. So his point was to me, and I asked why back then. He said, well, because what ends up happening is, unless it's going to be a sustainable bull market, and he would give me the mechanics of it, banks would recommend to buy gold. And so gold will go up, and anybody who's buying silver is the smaller fund that doesn't have a lot of money. So when silver rallied to catch up after gold, it was usually because that was the top in gold and they couldn't afford it. So in the end, both metals would sell off. He goes, but when silver outperforms gold in a rally, and they rally almost simultaneously, depending on your variables, the rally is more sustainable. So that was from former.
Why? What was his answer to why to that? What makes silver leading gold more sustainable bull market in precious metals?
Okay. He was basing this entirely off of bank institutional recommendations. So if a bank had clients and they would say buy precious metals, clients would spend $1 on silver and $1 on gold. So silver, which is a thinner market to begin with, having been, when you say to someone buy energy, they buy a portfolio of energy. So the banks would say buy precious metals, and they'd buy both. And when they bought both, that's usually the banks were buying, the clients were buying, the funds were buying, and who else was buying. But they would actually say buy metals, and you would see both markets go up because money was flowing in. You'll see that a lot now. An example of that now would be looking at, let's say, gold at the end of a year. Gold at the end. See this? Gold at the end of 2017. Banks saying buy precious metals. Okay, and silver did the same thing. But if the banks aren't recommending, if the brokers aren't recommending to precious metals and gold just rallies, then it's more likely a short squeeze. This is historically speaking. And anyone who calls up like a smaller fund back in the day, like Trout, they would say, well, I don't really have a lot of money to buy gold. Gold's rallying, but we should have some precious metals on our balance sheet. So let's buy some silver. And that would be like the retail buying the top tick. And so you're right. If this rolls over, put it this way, if this rolls over, these are the trades. If this relationship rolls over, the gold silver relationship, I would buy silver. Now that sounds simplistic, but let me it harkens back to a concept where if you're bullish gold, buy silver. If you're bearish gold, sell silver, because it's more thinly traded. So if you're bullish and the markets haven't moved yet in gold, you buy silver. But that hasn't worked in the last year and a half. So to your point, if the gold-silver ratio comes off, would I buy silver and sell gold? No, I'd probably just buy silver because I don't think gold's going a lot lower because of this whole money thing.
Okay. So you wanted to talk about what, trader psychology, Vince?
Well, yeah. I mean, if you don't mind, I just want to. I have a full plate right now, and the first thing I wanted to discuss is a concept that people talk about. Well, I'm working on three things right now. Actually, doing three things right now. The first thing is the metals markets are now, I think, primed for opportunities again because of this market structure change. So Echo Bay is launching, well, we've launched it, a new fund.
I saw that. Yeah.
Yeah.
You could show your website. Go ahead, show people.
Yeah, I mean that's for clients, but okay. It's echobay.com. You can't. There's nothing on it unless you're a client. But basically, we're just starting a new fund specializing in metals, and we're taking in outside money again. And that's.
And I noticed you're a CTA, so you're registered.
Right, and that's and so this is not a pitch to raise money from the audience. I'm just letting you know that we're doing that, and so I'll be more plugged into the metals than normal, and probably if you guys follow me on Twitter, I'll be putting out more information but less actual prices because I'd be restricted to do that for the action. But this is the reason I'm bringing that up, other than the fact just to letting you know, because this is all tying into the psychology of the markets, and I think something that would appeal to people. The second thing is I'm actually proud to be working on a new project with a professor at UConn on continuing education in options. I'm not an adjunct professor yet, but that's part of the process where we actually help CFA people, which are artificial analysts, are the fundamental analytical kings. Apparently, they don't have a lot of ongoing education for options, so we're going to do that.
Well, congratulations.
Thank you. The reason I bring that all up is
to teach. It's fun to teach.
It's fun to teach. It's clearly, right? You're good at it. The reason I bring this up is because in preparing for the teaching as well as in preparing for the trading, you have to get in shape again, and whether that be physically, which is part of it, or mentally, which is part of it, you have to do things to prep. And you circle back and you read things that you read before, and I want to share what I'm relearning, I think, with your audience, because it's very important, especially for people that are just entering into the trading arena. And I actually wrote these notes down, so forgive me if I look down. But where am I? Where was that?
So before people enter shark-infested waters, they should do this.
Yeah, exactly. Okay. There's a book that I read, and it reminded me of a couple phrases. Start with the phrase. Here's the soundbite. The market is a rich uncle, and this was from a guy named Georgie Kaufman. And by the rich uncle is the guy who takes you to the corner store and he gives you $1 and he says, go get a lollipop. And sometimes he says, keep the change. Sometimes he says, give it back to me. Every so often, your rich uncle only has a $10 bill in his pocket. And you go to the candy store, you buy the lollipop, and the rich uncle says, keep the change. The rich uncle is the market, meaning you take what he gives, you never stick your hand in his pocket. So if you stick your hand in his pocket, you're going to be punished. So that's the soundbite.
I like it.
It's great. It stuck with me. And here's the psychology behind it that I just reread. If I sound a little bit dry, trading is not like a typical learning environment. And the world does not prepare us for it. It has to be learned. We live in a structured world. We're raised in a structured world to protect using protection, reward, and punishment. And it's an external construct that protects us and prepares us for the world. So you're a kid and you're at the age where you don't understand, and you have a fork and you're walking up to an outlet with it. Well, your mom's going to slap you. That's external construct to save you from yourself, to prepare you for it. Now, that's called the basic social construct framework. I'm not going to go down too much of a rabbit hole here. This also applies to business. There are rules, there are constructs, there are behaviors. The market, which is the business world, tells you what you can and can't do. Trading is the antithesis, of this mental mindset. We are hardwired to respond to external structure, constraints, and expectations. You get graded on tests, etc. But markets, and this is what I think is not being explained by the online brokers who just want you to trade. Markets offer complete freedom of expression with unlimited possibilities. The only thing that controls our behavior in markets is ourselves. The market doesn't forbid you to do anything. The market doesn't give you an external construct. The key, and I think this is probably something really in your wheelhouse to elaborate on, is that trading is not like anything else. So it's simple to trade. It's not easy. Trading is there's no one to tell you you're wrong except the margin call. You can delude yourself, you can rationalize, but the key is because there are no external forces keeping you in the lane, there's lines on a highway, you have to have a discipline and be disciplined about it. Whatever your discipline is, I don't know, the moon rises on Wednesday at 6 o'clock, whatever, stick to it, because it's really self-control. If you don't have self-control and good money management, you will fail. And this is, part of why I hate the game. In fact, it's one of the reasons that I acted like a goofball the first time you contacted me. And thankfully, I've gotten by that. The game is, here's a call spread recommendation. They give you the tools, and the tools to show you what a call spread can make or lose you money, or to show you what the market can do, or give you technical analysis. Those are hammers. Those are tools used to come up with your own ideas. It's how you apply them. Kids talk about apps. An app is an application. How you apply the hammer to the nail is what makes you a good trader. So if you don't have any external constructs, if you're never taught about safety, you will smash your thumb. Trading is the same idea. There are no external constructs. All you have is the rich uncle who will slap your hand if you put your hand in his pocket. The market owes you nothing. You are entitled, various religions say this, I'm not going to get into the religious aspect of it, but you are entitled to your actions, but you are not entitled to the reward from your actions. You must have self-discipline. I mean, anyone who's survived the markets knows that, and I'm sure you could add a lot to that. Dale.
I appreciate that, Vince, and a lot of pearls in there for people to not just read and think about, but actions speak louder than words. So, for me, it's been helpful to write down important rules, important words. One of my most important words for a trader in capital letters is next. Because next.
Yeah.
Win, lose, draw, don't dwell, learn from it, but next. Right. So it's like you drive a cab, you're going to get a few tickets here and there. Next passenger. Right. So, we should write a course together and edify people on things that they could only get. Really, trading is all in our heads.
Right.
So I look forward to my next counseling session with you, man.
Can I just throw in three? You just threw at me when you said next. People, if you don't understand like intimately what he's saying, think of these phrases, because that's not the phrase I use. But I have a phrase. My phrase is, it's just a trade. My phrase is, move forward, move on. It's a marathon, not a sprint. And if here's an analogy that might make sense to you. If you're an athlete, especially baseball is all about getting the next at bat. You have to be in the game. Next. Okay, I struck out. Next.
Right.
It's athletics is actually a good analogy.
Yeah, a quarterback doesn't go into the huddle and go, "Oh man, that interception. I don't know if I could do it anymore." I hope this next play works. It's kind of like someone saying, "I hope this one works." No, you have to be a warrior and challenge the market instead of the market being challenging.
Whoa, say that again?
Challenge the market instead of the market being challenging.
Could you, all right, so now I'm your student. Could you explain that?
You've done your work.
Right.
You have the contingencies. You know why you're getting into the trade. You know what you're risking on the trade. You know what the potential is for the trade.
Right.
Before you click your mouse, you say, "Mr. Market, I've done my work. Prove me wrong."
Right.
Not, "I hope this one works." And I'd rather be stopped out than watch the trade that I've diagnosed go without.
Absolutely.
More painful. So,
absolutely.
Vince, why don't we get to how people could get a hold of you and follow you on Twitter and any projects? And as a CTA, do you have a minimum for your fund?
Well, I'm not taking outside money right now. I'm working with one institution, but in 6 months we'll be taking outside money. I'm working with an RIA, but as it develops, I'll let you know. Because
and you were running, you said you were doing a webinar or two. I think you said that on Twitter that you were holding classes. Do you have a session in the morning that you work with people?
Yeah, I appreciate you giving me the opportunity to plug, but the gold fix is something I was doing, but I stopped because of the preparation for the fund and this other stuff.
Okay.
But the gold fix will happen again, and I'll let people know that. My suggestion is follow me on Twitter. It's VLancey Pictures, at VLancey Pictures, or just Vincent Lancey. It's around there. But eventually that'll be a locked account, except for followers, because I might be putting information on there that I shouldn't go public or shouldn't go too public. But I would say, get in before the door is closed. But
go ahead.
There is something I do want to speak to that benefits everyone if they're interested. I've mentioned, and by the way, this is a gold fund I'm doing, and don't get me wrong, I don't want to just trade gold, but I've been told that there's a lot of demand for this now, so I'm doing it, and I do know the markets. So anyway, the thing I really wanted to talk about was on behalf of a friend, Michael Moore. Now, Michael Moore is he's a best of breed technician, and he's been around for 25 years. And his clientele, he's very high end. His clientele are institutions. Now it's thousands of dollars a month for his product and oil and gold, but I'm not here selling that. I've been his client for 7 years. For the last 2 years, I've been saying to him, would you please, I've been begging him, please make a retail product. Please make something that, you know, an audience like yours, Dale, could appreciate and use. And Michael's writing is very dry and very professional. And I can kind of elaborate and explain on stuff. And I'm happy, I guess announce is the right word, that about 3 weeks ago, he said he checked with institutional clients. They wouldn't be upset. He wouldn't lose them. He wouldn't be cannibalizing them. But he's going to be creating we're going to be doing it together, okay? He's going to be creating a retail version of gold. And it'll basically be his numbers, but I'm going to be adding a paragraph of explanation of possible trades. Not necessarily trades that I would do, but trades that you would do based on his numbers. And that's something he's going to be offering, although I'm not sure how. If you have interest in that, and we're in the process I'm in the process of creating a template, because he has all the data, and I'm just going to write some words around it so it makes sense. Because like I said, the numbers are a tool. How you apply them is your perception on the markets. You know, if I gave Dale a number, DXY 98.50, well, what does that mean? It means bullish above, bearish below. Well, do you sell a rally? Do you buy above the number? Do you sell below? There's different ways to do that. Anyway, so I'm working with translating his work to this retail product that he's going to offer. I'm not sure the price point, but if anyone out there is interested, I would ask you to contact Dale, and he'll, you know, I don't know how, Dale, how do people contact you? Email?
Twitter.
Okay.
Or
so
email. Yeah, email.
Contact Dale in a private fashion, you know, on a DM, or follow me and DM me, but include Dale, just so I know what's going on, where it's coming from. And I'll let Michael know if there's interest. But if anybody who follows me on Twitter looks from time to time, I'll put his stuff up, and it's just outstanding. It's just I can't put the whole thing up because it's thousands of dollars.
I got to wrap it with the most important question of the whole interview.
Okay.
Have you been to Wrigley Field or Comiskey Park?
I have been to Wrigley Field. Sadly, I have never been to Comiskey Park. I am a baseball person.
I was never a Sox fan, but they had the first exploding scoreboard, so I had to go. But anyway, they exploding, you know, fireworks every time someone hit a home run in Comiskey Park. The Cubs didn't have that. They didn't even have night games when I was there. So anyway, how do they look? The Cubs going to be able to catch St. Louis? Are they leading them?
Well, being a person who attended both World Series victories by the Phillies,
yeah,
when they won, I would have to say.
Is that where you're at? Are you in Philadelphia?
No. I'm in Stamford, Connecticut now. But okay. Look, I'm a Phillies fan by genetics.
Okay.
I'm a Yankees fan by transplant, but don't let that bother you. Only because I was in the Bronx. But I'm a baseball fan, so I played in college.
I figured when you used that baseball analogy.
No, exactly.
Yeah. All right.
To your point, I like the Cubs, but all right. I think I like the Cubs, but St. Louis, it seems deeper this year. I don't know.
Anyway, thank you for being my designated hitter today, Vince. For being a DH and, you know, stepping up and talking about how you round the bases.
Yeah.
I could keep going if you want more baseball metaphors. And, you know, and never worry about having to sacrifice like you do with a bunt, because
that's right.
A sacrifice is something you're doing for someone else.
There you go. That's actually
all right, buddy. I had Vince speechless. First time in history. All right, well, buddy, I love you, Vince. Thank you for being with us today, my trading warrior brother. Wish you, you know, pips just fall on your foot, not like gold bars, but fall on, you know, just rain down on you and your clients. And good luck with your new adventure with Michael Moore. And it's not the Michael Moore who, is the political.
No. We're not doing any videos about corporate greed. No, it's MOR. If you follow me on Twitter, you'll see me throw his numbers up once in a while. But it would be helpful to him. He's a good man, and it's exciting for me because I'd be able to throw his stuff up when we talk, and we can talk. Once he's doing that. Okay. Thank you again for having me on, and I want to close by just saying something about you, if that's okay. So you can blush if you want. I hate the game, and there's a phrase, don't hate the player, hate the game, and the game to me is marketing and selling and websites telling you buy this call spread, and paper trading is the same thing as real trading, and Dale's the kind of guy that, for the right reasons, is why you don't hate the game. It's why you play the game.
Thank you, buddy. Thank you, buddy. I appreciate it, Vince. So really, man, we'll have you back in a few months, and you could update us with progress, and maybe you and Michael could come on together next time.
That's exactly what I'd like to do. But
okay.
I'm going to go on the record saying a couple months is too long, Dale.
Oh, sorry. Is it? All right. Yeah. I've had people say, "What do you mean, Dale? 3 months from now, I could be dead."
But that's a sign of how many people like to be on the show. I hope your audience has enjoyed it twice as much as I have, because that would mean. Right. Take care.
All right, buddy. Vince Lancy. Everyone know how to follow him, and at V Lancy Pictures. And thanks, Vince. And we're all going to be watching that gold silver ratio, and now we know how to treat our rich uncle, right, everyone? All right. That's a wrap for today. Peace. Remember, don't just count your pips, count your blessings. I think Vince was one of those for us today, and I'll see everyone tomorrow to wrap up the week. Good hunting. Adios. Thanks again, Vince.
Cheers.
All right, buddy.